Happy New Year, everyone. Christmas is over. And now we're going to deal with the new year and the New Year's trade. We're also going to show you that it was back in 2009 in February when we were at that point in time probably more bullish than the word bullish meant because we had already played out that, doom and gloom story and we were wholesale over here. Now, when I break it down here on the monthly unit, that was the time to be the biggest buyer. Now, you can see that when we did that multi-months up, meaning 1, 2, 3, narrow range, 4, 5, 6, 7, bam, we had a pullback month, and then 8, 9, and then going into the year 2010. So when it all started over here, we were extremely bullish. That's when you wanted to be bullish because nobody wanted in the market. In fact, everyone was walking away from the stock market and had forgotten about it. That's where the biggest money's made. Then we started out 2010. Now, let us not forget that SMF and myself, I've been around over 30 years, we called the May flash crash of 2010. In order for you to see that, go to the Services tab, HFT, High Frequency Trading Courses. Then, if you go and you click right here on the iTunes, you will come to the Ghost Exchange. And there, you will be able to watch the hour and 20-minute long movie. And yes, you'll hear me in there and you'll hear me talking about it. And we have the live analysis and the live videos before the fact about a flash crash was coming very quickly. And it did exactly that. So if you have any doubts, the proof is here. And not only that, you'll hear the same voice, same charts, same everything. So here's what we're telling our bigger staff is that we had dropped 1,000 points, but when we got to the second year of this bottom bull, we had 1, 2, and then we hit a bottom right here. And at that point in time, the S&P was at 1025, and we bought it there. And then we traded up to the high of another new year. This is December 1, and that at that point in time, we were up at the highs of that year ending. The high in the S&P was 1262, and we were quite proud of ourselves because earnings started getting better. The stimuluses were early on. We had hit a monthly buy signal. Then, as we rallied up into the new year, just like we're going into now in 2014 in this expansionary model, is that we rallied up and we made the highs. And I will draw a horizontal trend line. And we're right up here. And at that point in time, we are around 13. Well, I can give you the high of that month. That was, once again, May 1st on a monthly level. And we hit 1370 on the S&P, and we're 2 years into the rally. Then we had called, we did, and we have all the live videos to prove it. We told everybody in the world and our trading staff around the world, our hedge fund managers that we know, it was time to get short. And that, once again, it wasn't because that there was an Armageddon picture. It was because United States of America, the government, couldn't get their house in order, and that we got a great pullback, and it lasted for 5 months of the calendar 2011, and that low came on 9/1 of 2011. Yeah, it did. And the low was 1,114. And the bottom there finally ended up hitting the low on 10/1. October 1 of 2011 at 1074, and it was time to get net long, and that October definitely likes to put lows in markets, and at that point in time, it was time to get net long the index and the leadership in the S&P 500. Then we ran up here and we closed it out. In this very month, we were at 1269 on the high, but now remember, on 12/1 of 2011, December, like we're in now, is that the low was 1202, but the high was 1269. Now, we started out the bull right here. Here it is. On 1/1 of January of 2012, that's not that far ago, we started out with the gap up. The monthly low was 1,258.86 pennies. Not only that, let's scroll over here. And that we started out with a 90 days, meaning that we ran straight up and made all-time highs of 1419 in the month of March. Then we had called for a reversal. So what ended up happening is, as we put that high reversal in on April 1 at 1422, the low was 1357. But here's the thing, we were overbought and we needed to come down. And we came down, we tested the 20-month and the 10-month. Oh yes, we did. And the low was 1266.74, and that this low had came starting June 1 of 2012. And we had that pullback that you would normally get. Now remember that we haven't had a 10% correction year to date, and that 2011 had definitely lived up to that, and that created buying opportunities for the big money to step back in again from those 2009 lows. Now, as we go over here and put that bottom in at 1266 in 2012, we rallied up and we hit an all-time high September 1 month of 1474. And that was a multi-year expansion level, and that, my friends, was an overbought level that we needed to pull back. And, bull runs have to have pullbacks. It's not Armageddon now. And that you can see here, we had a negative month, and that, yes, the high on 10/1 and the low was 1403. So we had 1470 on the high, opened at 1440, 1470 on the high, and that low was 1403 right here. And what ended up happening, behold, is that when we put in that low right here on 11/1, November 1, 2012, we came right back down in that channel at 1343. And that was where the buying opportunity started. And this is where this current part of this 2009 bull, the cycle part right here, is where we went right up off of those bottoms, and that on 12/1, going into January to the new year, just like we are now, my friends. And believe me, if you've been a person on the sidelines, you have every reason to get here with us. And I'll tell you why. Because January, 1 year ago, the new year was coming upon us. The high was 1509 on 1509 on the S&P, and that was a wonderful high. But let us not forget that actually we opened at 1426 on the opening of that. We went up to 1509, but let us not forget that we never went lower than 1426 for where the open was, and we started off with a very straight up move. Now, having said that, my friends, and all of you are my friends, because here's what happened in this particular calendar year. We went up. Now remember, this looks like one of the other calendar years. We went straight up to the high right here. Let's draw a trend line right here. Not only that, my friends, that high came on in the month of May, and that the high was 1687 at that point. One of the things that we can show you is that if you go to the trading tab and you click in the S&P 500 and go search, you're going to find out every time that we called that a market had made a top and was ready for a pullback. Now, if you want to get involved with the free trial, simply click on free trial. Go through the free trial page, get started today. If you want to open up an account, you're welcome to do so. Go down, open an account. Click on the tab, go through the complete page, go through the videos, hit open an account. Yes, click get started. Yes, we will fund your trading account for the next bull run. And we will supply the capital so that you can be in the marketplace instead of you sitting on the sideline, and that you have every reason to be here. Click get started today. It's that simple. All of the live analysis before the fact, well, every stock and everything that we do, and we specialize in high frequency trading and mathematical algorithms. Not only that, my friends, as we get back to that pullback, we did have the pullback from 1687, and we had a buying opportunity that at that point in time, we went from 1687 on the high to the low of 61 to 1560. And that there was the greatest buying opportunity in 2013. And that, yes, you made a lot of money shorting the pullback here now. But when we got to that low, we took off. And we made another high over here in 8-1, and we were at 1709 on the S&P. That was that monthly high, and we also clearly stated that we would have a pullback from that high, and we did. 1709, and we dropped to the low that month to 1627, and on that monthly close, 1632. Then here's what happens. We start 9-1 out, and that from that close of 1633, the prior, we went up and we made an all-time high of 1729. Yes, we did. So we opened at 1635, we went to 1729, but we had a lot of volatility, and that monthly low was 1633. Now, having said that, we came in to the month of November, and we opened at 1758. The high was 1813.55. That monthly close was 1805 on 11th month of 2013. Now, when we got into the month of December, we have gone from the open of 1806 to the current high of 1842 and the low of the calendar month of December, where sellers had stepped in and took profits half of the month, let's say, is that now we are hitting 1842, my friends. And we will let the world know it. We're going to let you know it. And when we're starting off the new year, we're starting off in a very, very overbought process going into January. That means that the major part of the bull community is in a current exuberant level. Not only that, we're going to have the calendar earnings that start in January 2014. What I am saying is that this bull has had double-digit gains in the S&P 500 out of 500 stocks. You would have to go back to 1997 to see this kind of move. But in 1998, after a big move from the 1996, and here, that's going way back over here, 1997, right here, I'm going to blow that up. Now, what you have, look at the 1997 monthly consolidation and a breakout. Now, it's very similar, and that the low then, believe it or not, was 729. And that this low here where we had the big breakout back in 1997 was 733, but we ended up making a peak high of what? 986 in December. Then they started 1998 out. But here's what happened. Because they were overbought and times were a little bit different, we were just now in the beginning of a lot of things. But we made the high 1998 at 1190. And then from 1190 on 7/1 in July, it made an all-time low here back to 923. So here's the following. The bulls are all in. Monetary policy, the government, you name it. The markets have overcome it, and they have. But here's the problem in the short term now. Remember that 2014 has a chance of being like 1998. And that 1997, we had double-digit gains in the S&P and everything, just like we're having in the calendar of 2013. Now, yes, that's 6 years later. But one of the things that we're going to say is we're going to have a 5-year anniversary in February of 2014. Yes, I wish everybody a happy new year. But my gift to you coming in this new calendar year is that you do not get sucked in to the highs when we're going to have some pullbacks. And I will tell you and the rest of the world today is that we're extremely overbought on a monthly level. I'm going to get down into here and I'm going to pull up an 1850 put on the S&P. This is the trade that is being done before the fact now, not after the fact. That does never make you money. But I will tell you that we are experts in the options. And that when we take a look at where the high back in 9/1 of 2013 was $174 on the peak. Now, just remember that the lows were around 20. There was a big move here when we had that big pullback. What I am saying over here is that we're going to be buying the 1850 put in the money. Oh, yes, we are. And that this side of the market is deflated. And not only that, I can show you what the low is. The low is $20.20 now. And we're buying this because, number one, we have to buy the pullback in the S&P 500. Not only that, my friends, the 1850 pays money in the short term. That there is a huge imbalance between the bear and bull percent index. There is also a huge imbalance here. Once again, my friends, I'm going to be buying wholesale, and there's a big fat profit right here because the S&P is going to pull back in the month of January as we start out the Happy New Year. Once again, Happy New Year to you. We have a monthly chart on the VIX, the fear indicator. When we were back in 1993 and 1994, I remember it just like I remember the market moves in all the calendar years, and that people were complacent, there was no fear, and there was going to be an adjustment in the market. And back in 1994, we made a peak right here. The fear indicator had made 2 peaks. Right here, there was no fear, and right here, when the fear level got up to high and it stopped going high, markets put a bottom in 1994. I was there. Then we came straight right back down. And then in 95, we were complacently and we stayed at a very low level in the fear indicator for the whole month and yearly, monthly in 1995. Here we go where the fear level hit the high in 1996 and went to the lows right here to the bottom. Now, here's what happened. In 1997, when we put the high in the fear indicator here, and the calendar month was 10/1 of 1997. What happened was markets were at their all-time bottoms, and you could see where the fear indicator had come down to its low. And people were very complacent once again, and there was no fear. Everything was great. Nothing could go wrong. But long and behold, that on 7/1 in 1998 put a triple top monthly high, and fear was at its all-time high, and markets were putting in their best bottom. And as we fell down, when this was at the high level right here, we were at the low in the markets. Then in 1998, going into 1999 was one of the best bull rallies that we had ever had. And when we put the high in the market, in the NASDAQ and everything, we peaked in the fear up here, but then we came back down, and then the fear levels went higher. That meant that the markets were at their low. The markets over here, no one was fearful. And we broke out, and people lost a lot of money in year 2000. In the year of 2008, we were, once again, no fear. Nothing could ever go wrong. And there, we went up. The markets put a bottom in the calendar of 2009 that we're talking about. So when the fear level was way up here, that's when you wanted to buy the market, and that's when it paid. And not only that, we went straight right back down on a monthly level until 2010 that I talk about. No fear, and we shot straight up, and markets were at their all-time lows. Then as that went down on a monthly level, markets were rallying and putting in their bottoms. So when I go over here right now, in calendar 2013, we have something to be worried about in the short term. That on this monthly calendar yearly level, and the beautiful year of 2013 that is going to be behind us, once again, Happy New Year to you, is that everyone is complacent. There is going to be a pullback. There are going to be several pullbacks in year 2014. One of the things that I will say is that the Dow Jones is up 122 handles, and it's at all-time highs. That means everyone is getting all in. There will be pullbacks, just like we have saying. Not only that, the NASDAQ composite. Look you got to go back. Hey, look, whoever thought that we were ever going to get back in this level, and I'm going to draw a trend line here that goes clear back to year 2000. Now watch the trend line. Now watch the resistance level. That is where the biggest move down for the couple of years that had happened. We're testing it. How much more could you ask for? Markets are not on sale, and this is the NASDAQ composite. Not only that, we're going to have several pullbacks in calendar 2014 before it even starts. Not only that, the NASDAQ 100 is at all-time highs. It's been a parabolic move up this year. Yes, it's acted better than the Dow and the S&P and the NASDAQ 100 stocks like Google, Priceline, you name it. We're right back up here, and I'm going to draw a trend line so that you can see where we're at. And this is the year 2000 and a big correction we had. This was a big year. 2007, this is the bottom of 2009, and we're going into 1 year, the second year, the third year, the fourth year, and the fifth year of this multi-yearly expansion. Now, we're not telling you that markets are just going to go really bad like they've done other times, but we're going to tell you that a lot of gains that happened in 2013 are currently priced into the market. So calendar earnings come up in the NASDAQ and the S&P and the Dow components, and that yes, monetary policy, the tapering process started, but beware. And beware for one reason. We're going to get a pullback, and I will be buying the $1,850 put. No one will have a lower price than me. It's on the record now, before the fact. Just remember, my friends, you have every reason in the world to treat yourself good. And please do the following. Listen, When stocks get on sale, we'll tell you, go to stock market funding. Go through the live analysis. It's all here. It's the best thing you could ever have. And we did have pullbacks in December from a short-term overbought. But this put 1850 pays. Not only that, it's been a good bull year. And, 2014 will have a 7 to 10% pullback at some point in time. You'll have other pullbacks from overbought levels. And I cannot remember how we have ended before. But look, we're extremely overbought. And I will say to you that be careful, that we're going to be making money. We're overbought on a lot of public indicators. Just beware. Yes, the new year is good, but guess what? The market is priced to perfection to start the new year, and the upside is going to be limited in the short time period.